What Canadian laws must a US company follow when selling services to Canadian clients? When a US business begins selling services to Canadians, the natural assumption is that only US laws apply. After all, the work may be performed from US offices, the contracts may be signed electronically, and the services may be delivered digitally. But Canada has a wide network of federal and provincial laws that apply to foreign service providers, even when the business has no physical presence in Canada. Understanding which Canadian laws apply is essential for avoiding compliance issues, unexpected tax exposure, and contractual disputes with Canadian clients. Business presence versus service delivery. The first distinction to understand is that Canada separates tax presence from commercial presence. Even if you are not carrying on business in Canada, certain rules may still apply to the services you provide. For example, digital service providers may be required to register for and collect GST/HST even without a physical presence. Similarly, certain industries such as consulting, engineering, legal services, and financial services are governed by sector-specific rules in Canada that may influence your obligations. Federal laws that may apply. Several Canadian federal laws can affect U.S. service providers, including Income Tax Act determines tax obligations and withholding requirements. Excise Tax Act GST/HST rules governs consumption taxes on services. Personal Information Protection and Electronic Documents Act pipeda regulates how businesses handle personal data. Competition Act covers deceptive marketing, pricing, and anti-competitive practices. Even non-residents must comply with these regulations when offering services to Canadian clients. Provincial regulations matter too. Each Canadian province has its own set of rules governing professional services. For instance, Quebec requires separate tax registration and may require French language compliance. Alberta and British Columbia have strict licensing requirements for regulated professions. Ontario governs digital marketing, consumer services, and employment standards through provincial laws. Even if your work happens in the US, Canadian provincial laws may apply based on where your clients receive the service. Consumer protection laws. Canada has strong consumer protection laws that apply to subscription services, automatic renewals, refund policies, pricing transparency, digital product performance. If your clients are Canadian consumers, not businesses, these rules can apply even if your business is US-based. A practical example. A US marketing agency offers digital strategy services to Canadian clients. All work is performed remotely from the United States. Because the client is receiving a service in Canada, the agency must assess whether GST/HST applies, whether their contracts comply with Canadian consumer protection laws, whether pipeda applies to collected customer data, whether repeated client visits to Canada may create a business presence. Even without stepping foot in Canada, the agency still has meaningful obligations. Final thoughts. Selling services to Canadian clients requires more than great delivery. It requires an understanding of Canada's tax rules, privacy laws, industry regulations, and contract standards. Compliance does not require a Canadian corporation in most cases, but it does require awareness. A clear understanding of Canadian laws helps US companies avoid penalties, improve client trust, and operate confidently across borders. If you'd like more insights delivered in the same straightforward style, you can explore our website. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.